Give me a few minutes and I'll show you a simple way to cut fake signals and only trade with the real trend. We'll use Market Bias by ProfessorX to define direction and Parabolic SAR to print the switch. Then execute with fixed rules so there's no guessing. I'm on the 1-hour chart, but the approach works on any liquid market and time frame. Risk to reward is set to 1 in 1.5, so results are easy to compare. The whole idea here is clarity. One tool tells us which side of the market to prefer, the other gives a precise trigger, and our execution rules keep everything consistent from one trade to the next.
While you're watching this, Supernova AI Bot is already trading, managing risk, and generating passive profit, 24/5 on full autopilot. No experience needed, my FX book verified, up to 15% monthly returns. Don't fall behind. Get Supernova now. Link in the description. Okay, back to the chart. Open indicators. Add Market Bias by ProfessorX. Add Parabolic SAR by Everget. That's it. 2 tools, 2 jobs. Market Bias filters direction and defines the pullback zone. Parabolic SAR prints the entry label. Keeping the stack this lean helps the chart stay readable and the rules easy to follow during live markets. Market Bias. ProfessorX. Double-click to open settings. Inputs. Set period equals 60 and smoothing equals 30, then confirm. Reading rule. The ribbon is built from smoothed Heikin-Ashi. Bright dark green equals bullish, bright dark red equals bearish. Will require price to pull back to the ribbon without closing through it. That no close through condition keeps us out of weak pauses that actually flip trend. Extra quality filter. At the moment of the touch, the ribbon shade should be dark. Dark green for longs, dark red for shorts. The darker shade reflects a controlled pullback inside an existing trend rather than a blow-off move. If it's still bright at the touch, we skip because that often signals a move that hasn't cooled off yet. Parabolic SAR, Everget. Open settings. Style. Uncheck PSAR and turn off trade state filling. Confirm. Reading rule. A buy label is a long trigger, a sell label is a short trigger, but only when market bias conditions are met. Think of SAR as the green light at an intersection. The direction comes from market bias. SAR just tells us precisely when to go. Execution rules for all trades. Act on closed candles and enter on the next candle open. Waiting for the close avoids mid-bar noise and fake flips. For longs, the stop goes below the most recent meaningful swing low, from the last 5 to 10 candles. That swing is a logical line in the sand, where the setup is proven wrong. For shorts, the stop goes above the most recent meaningful swing high. Target equals 1.5 R, so outcomes are comparable and you don't have to guess exits. Long setup checklist. 1. Trend and location. Market bias ribbon is green and price is trading above it. This anchors us to the dominant side. 2. Pullback quality. Price touches the ribbon without closing below it. At the touch, the ribbon shade is dark green, not bright. That tells us the dip was controlled, not a full momentum break. 3. Trigger. After that touch, the next parabolic SAR signal is a buy. This provides the precise moment to engage. When all 3 are true on a closed candle, enter on the next open, place the stop beneath the nearest swing low, and set the take profit at 1.5 R. If any piece is missing, do nothing. Skipping marginal setups is part of the edge. The trend holds up with a green market bias ribbon and price riding above it. We get a neat pullback that tags the ribbon and does not close below. On that touch, the ribbon shows dark green, confirming pullback quality. A few bars later, Parabolic SAR prints a buy. Conditions align on the close, so we enter long at the next open. The stop sits under the pullback swing low. Use a clear pivot, not a tiny wick, so normal noise doesn't kick you out. Target is 1.5 R. Typical path: 1 or 2 candles of hesitation as the level is tested. then continuation while the ribbon stays green and price holds above it. If the ribbon turns red, or price closes through the ribbon before the buy arrives, stand down and wait for the next aligned sequence. There will always be another setup. Forcing entries is how consistency gets derailed. Short setup checklist. 1. Trend and location. Market bias ribbon is red and price is trading below it. That keeps us selling rallies in a downtrend rather than bottom picking. 2. Pullback quality. Price touches the ribbon without closing above it. At the touch, the ribbon shade is dark red, not bright. A dark shade at touch signals a controlled countermove rather than a full reversal. 3. Trigger. After that touch, the next parabolic SAR signal is a sell. This gives a clear, rules-based entry. All true on a closed candle, enter next open. Stop above the nearest swing high, target 1.5 R. If price closes back above the ribbon or the shade at touch is bright red, skip. Discipline here removes a lot of avoidable losses. Bias is down with a red market bias ribbon and price below it. A modest bounce tags the ribbon from underneath and does not close above. At the touch, the ribbon prints dark red. Shortly after, Parabolic SAR prints a sell. We enter short on the next open, place the stop above the bounce swing high, and set the target at 1.5 R. 2 common outcomes: a steady slide that tags target while the ribbon stays red, or a pop that tags the stop. Both are part of the method. The edge comes from only taking fully aligned signals and keeping risk per trade fixed. If you find your stops getting clipped by tiny spikes, double-check that your swing reference is a true pivot, not a micro wick. Final recap. Direction and pullback zone from market bias 60-30. Only trade with the ribbon and require a touch without a close through it, plus dark shade at the touch. Entry from parabolic SAR labels that arrive after the qualifying pullback. Execute on the next candle open. Place the stop beyond structure and set take profit at 1.5 R. If any box is unchecked, do nothing. Trade the plan, not the impulse, and let consistency over the next 50 to 100 trades show the edge. Little additions, like logging date, pair, timeframe, entry, stop, target, and result, will make your stats crystal clear and help you refine without changing the core rules.